The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 289, Nasdaq up 161, S&P's up 33, gold contract down $10.30, trading at $12.15 an ounce. We have silver down 15 cents, $14.31 an ounce. Light sweet crude down 28 cents, $65.91 a barrel. We're going to get those API numbers out this morning.
Yeah, EIA this morning. Yep.
Yeah, we had API last night. Notes and bonds. Now, notes and bonds, folks, we're going to find a lot. They're going to release a lot of information on the marketplace today. You have the 10-year note down 12 ticks, 118.13. 30-year bond down 21.38.09. Now, both notes and bonds, folks, bottom line, they continue to want higher price. They've had the volume. You know, this market got a nice bounce going, and if these bonds still, they're back, but if the volume still stays light, guess what? That means they still want higher price. That's going to tell us a lot about the bond market, and I expect also about the equity market. King dollar finally took out its August 15th high. We're at 96.880. Now, it didn't take it out with conviction. It had volume all the way up, and then it gave it up yesterday as it took it out. So we'll see how that baby shakes out. The euro is under pressure. That's at 113.22. We get the yen trading at 113.32. Volatility, we got it in spades. It's a beautiful thing.
One way or the other, man. The market's jumping around. Today it's to the upside. We'll see what happens by the end of the day, man.
And the same with yesterday, folks.
Yes.
You get a two-way market out here, and it's a beautiful thing. And if you want to understand how to trade a two-way market, folks, each and every day right here, outstanding show, Kevin Hinks, Tom White, his team at TFNN. That would be pretty good.
That would.
At TD Ameritrade Thinkorswim, every trading day right here, folks, 11 to 12 Eastern Standard Time. And if you haven't test-driven yet the Thinkorswim platform, it's an outstanding platform, folks. As you come over to our website, you'll see the banner right in the very center. Hit that banner, bring it up. They'll allow you to trade with paper money, and you can follow Kevin and Tom as they do their paper trades and fast money each and every day. Kevin Hinks, what's going on?
Hello, Tom. Hello, Tommy. Happy Halloween, guys.
Happy Halloween. That's right. Happy Halloween. I like it. And it finally got cool.
I'm giving out candy and trading ideas, and I'm all out of candy.
I love it. I love it. That's perfect, man. Well, listen.
We'll take trading ideas then,
everyone,
I guess.
yeah.
There we go.
Guess what, folks? That's the whole deal about, you know, do you want to basically give someone a fish or teach them how to fish? That's what TD Ameritrade Thinkorswim is all about, that's what TFNN is all about too, which is pretty cool. You know, and Kevin, you know, you talk about a market to really teach people both sides of the market and volatility. I mean, you know what I've found, Kevin, and I think I've been doing this so long that what ends up happening is that I think you can fundamentally understand how markets work and all that, but you got to see the cycles. Do you know what I mean? You got to see it because then you see it and you say, okay, man. And so I think it just gets you a little more tuned. Doesn't mean you're going to be right. It just means that you're more familiar with it. You know.
Once you get it's you know, I believe, Tom, that every trade starts out with some type of an opinion.
Yes.
Right. It can be bullish. It can be bearish. It can be neutral.
Right.
That's still an opinion. And then you got to put the fundamentals on board and the probabilities on board and get all those lined up. And that doesn't mean 100% chance you're going to make money, but you're going to give yourself the best possible opportunity to make money.
Yes.
And then, even if it does go wrong, you're risk-defined, so it's not going to take you out in one day. You're not going to have catastrophic losses. So that's what we try to teach. Start with an opinion, apply the fundamentals, apply the strategy, and then hedge the risk.
Yeah, it's pretty cool, man.
It is.
It really is. You know, folks, and what you'll see in the program is that then let's do the worst case scenarios. So you get a stock that doesn't work. Then what happens, folks, is that you're going to see how you can do corrective action inside of the option market to basically mitigate the amount that would be lost. which is really cool.
Sure.
You know,
what they call it, trade repair, right?
Yeah. I mean, and that's crucial. You know, and the strategies themselves, man. You know, when I was yesterday, Kevin, when I was watching this market, I'm saying to myself, man, you know, you talk about fast fingers, and what happens, folks, is that yeah, the VIX is up. But guess what? These indices are still trading penny wide, and that's like unbelievable. Right. I mean, it really is cool, man. That,
yes.
You know, that they can keep them penny wide, because guess what? You know, you haven't been able to. I'm not encouraging day trading options, folks, but you haven't been able to do that for a while.
Right.
But the reality is, you know, in the Qs and the SPYs, that's game now. I mean, you know, you get a 40-point move in the SPYs in 10 minutes. It's like, okay, man.
Right. I mean, you know, sometimes this market, I've described this market as riding a wild tiger. I'd love to jump off, and I have no idea how.
Yeah.
But you know, here's what I think. When you get a market like this is a time a lot of people, this scares a lot of people away from trading in these markets when it should be the exact opposite. This is when you should heighten your trading and get involved and pick your spots. You know, it's like the old Warren Buffett, right? Be greedy when people are nervous and be nervous when people are greedy. So right now, the world as we know it, the trading world is nervous. You can see that by the elevated volatility.
Yes. No, I absolutely agree with you. I think this is, I love markets like this. And it has to do with, folks, and this is what's cool about this. So it doesn't matter whether you're a bull and a bear in a market like this, because you have a two-way market. In a true two-way market, okay, bottom line is that as long as you don't go over your head, you're going to do fine, you know, because the movement's fast, and you can't get greedy. You know, you're going to take what the market gives you. It moves fast, well, take the money, man. I mean, you know, what has happened in this market, we haven't seen these types of moves. Sometimes you have to wait 6, 8, 9 weeks for a type of move like this, and you can get it in, you know, 5 hours. You know, so.
And we say it on our show all the time, guys. Why are we closing this trade? Because we're in the moving business, not the storage business.
Yep.
Right? Keep those trades moving around. If you've got profits on and the reward is less than the overall risk, take that trade off. Right? You use good ideas to take trades off and just manage this trade. It's a great job, but it's not easy.
Right. I was just going to say, NASDAQ 100 in the last less than 48 hours went from 6580 to 6980. You're talking about 400 points in an index that was trading at 6500 in less than 48 hours. So that's a fast market for your program, Kevin.
Yeah. And of course, you know, we didn't talk about Facebook yet, but, you know, bottom line, Facebook's up 860.
Yeah.
You know, and, you know, it's wild is that, I mean, they're still talking about numbers of people, but as our man Jason was saying earlier, I mean, they're going to start talking about how much money they're taking in versus the amount of people, because I think they're at a, you know, 2 billion people is a lot of people, man. How many more people are on Earth?
Right. And think about this. Here's what I like about Facebook from a perspective of long term. Let's say, for instance, that Facebook's demographics are drifting to the upside.
Yeah.
Right? But where are the younger kids going? They're going to Instagram.
Right.
Well,
Yeah.
guess what, folks? Facebook owns Instagram.
Right.
Yeah.
Right? So they've got, like, their hedge in there.
Oh, yeah. They'll figure out how to monetize it.
They will.
Yeah.
I believe so as well.
Yeah.
Listen, folks, that's outstanding program. Fast markets. Kevin Hinks, Tom White. Kevin, you have a great one, safe one. Of course, we look forward to the program.
Great talking to you guys.
Thanks, Kevin.
Thank you. Stay right there, folks. Tommy and I are coming right back. We're gonna be talking oil. Dow up 270, Nasdaq up 158, S&P's up 31. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now is up by 314. We get the Nasdaq up 173. You get the S&P's up 37. And gold's taking a hit out here. So we're down 11.20 as the dollar went to a new high. Let's go over to the gold contract and take a look at it. It hasn't had the volume on the pullback, so we'll see if that changes. No, it's not changing right now. You're going at the 538,000 contracts. So this is going to need a lot more to break down. Bottom line is that you got it down 11.20. That's quite a bar, though. It's coming in at 532. If we go over to the GDX, we take a look at the GDX. GDX is coming back to its breakout area, so that's 1871. We've hit 1864. Okay, so we want to close over 1871. That's how this would shake out. You got a small gap there. I'd like to see that close over that number. If we go into the NDX 100 and we take a look at it, what's moving it out here, Netflix is up 8.4.
Staggering numbers. I'm sitting here shaking my head, right? It is staggering. I mean, I just talked about this one from 65.80 to call it 7,000 now. Just huge at 48 hours, but amazing, yeah.
Right.
And this would do it, yeah.
Netflix is up 8.4%. T-Mobile's up 7.2%. You get Facebook up 6.2%, and Intuitive Surgical's up 6.1%.
Yeah. And I know Apple's up, Google's up, Microsoft's up. I mean, you're talking about at least a couple % across the board. Apple had their event yesterday, talking about a variety of products they introduced. They come out with their earnings tomorrow after the bell.
Yeah.
Should be interesting, but they're getting them popped today, along with the rest of the market, of course.
Right. Google's up $42. Where's Amazon?
Amazon's up big as well.
Amazon's up 86.
Yeah.
They've already come out with their numbers. Interesting.
So what's Bezos have? 80 million shares. So every $10, his net worth increases by about 800 million, and the price is up 80, 90 bucks. Not a bad day, yeah.
So inside the Dow, you get Boeing putting 78 positive points, Apple 38. Apple 36, Visa 36, Goldman 32. Taken away from it, Procter & Gamble's putting 11 negative. You got Walmart putting 9, Verizon 8, McDonald's 3. Nothing heavy, man.
Pretty marginal stuff. Yeah.
Nothing heavy at all.
Yeah.
Let me look at this dollar again. So the dollar index, folks, this is going to get intriguing here because you know, it seems what has happened is that it used all its energy to get into this high. You know, you can see that it was pretty amazing. I mean, it was pushing the high with volume. 28,000 contracts on the 24th, on the 25th, 28,000, on the 26th, 28,000, and then it took it out yesterday with 16.
Yes.
You know, so 96,450 is the number to keep your eye on. You know, intraday out here. Yeah, intraday looks like it still wants to stay over there. I mean, you got that at 850 you had the pop up. There must have been a number that come out there. So we'll see how that shakes out. But most times, if you don't break with conviction, you know, bottom line, when you die like this, your probability is pretty good that you get back underneath it.
I think did we get payrolls this morning? ADP payrolls. Was that this morning? I think that was a good number. Whether it was last night or this morning. So that could be, even if it was at 8:30, kind of the heels of that.
Right. So, oil.
That's right. It's Wednesday. We get EIA numbers every Wednesday at 10:30 a.m. Eastern Time. We'll jump over to the Nadex platform. Let's expand that, close a few things here. So we'll keep up the crude oil contract. We're trading the December contract. I'm going to close these out. So it's 10.22 right now. You get those numbers at 10:30. You have oil trading just under $66. Quite a pullback in the last couple of weeks from trading at 75 and change.
Yes.
Looking at some of the possible spreads coming into that news that we'll get in about 7 minutes. I'm going to start it off with the 11 a.m.s and see what kind of action we got. Now, we've already moved pretty dramatically. Even since 4 a.m., you're talking about we're up there at 67. We're now under 66. So taking a look, what happens with the trades, we have 66.25.
Okay.
Not bad as a pivot point we can use. We are almost 30 cents below that number, though. So I'm just going to jump around to try and find one. We're, of course, looking for a spread. And this is why I say we'll jump to the noons, and we've got some action. And we have $66 spreads to the upside and downside. So we're looking at setting up a bullish spread, where we'd be buying the spread, where we're sitting basically, and as we're saying, this oil is continuing to drop, so we're now even 12 pennies away from this spread. But we have exposure on the bullish side from 66 to 67.50. You'd be buying that spread. You have a similar exposure to the downside, 66 to 64.50. You're selling that spread. Both of them combined cost you $49, which represents 49 cents away from $66 is where you begin to break even.
Right.
And the reason why the bearish spread is $11 more expensive than the bullish is because we're exactly 11 ticks below that $66. So there's your intrinsic value. You're paying about $19 in premium for defined risk exposure until noon. Not bad, 50 cents. A little expensive, you know, a little bit of a bearish bias because you have that 10-penny head start to the downside. And let's just see where some of the dailies line up. So we'll jump to the 8 till 2:30s. You have 66.50 is an option you could use if we got to there. But again, we're already 60 cents below that. So, you know, and just if you ever wanted to make, you know, a bearish one-way trade, maybe you think oil is going to dive there. Not a bad option here, just to jump around as we do. You got oil trading at 65.91. If you were going to sell this, your max loss is $69. But what to keep in mind is that you're really only paying about 10 cents in premium, the difference there. And for that premium, you have a defined risk of $70 to $230, which is not bad if you're bearish bias.
Profit to $230, right?
Yes, to your max profit. And then let's just check out the dailies one more as we come in. Oh, so this is interesting. So the big dailies do line up at 66. So let's see how these play out. Now these
are $5.
Yeah, instead of a $1.50, you now have $5 of exposure. So if you really got a mammoth move, you have it all the way. And you have till 2:30 instead of till noon, right? So an extra 2.5 hours. So they're going to charge you premium. They're really going to price in the extra 2.5 hours because that's legitimate no matter what. And you might get a little premium, but realistically, $1.50 in exposure, they're not going to charge you a lot of premium for that $5 because that's a very low probability event that that would ever happen. So your bullish spread, $26. And on the bearish side, it's going to be a little bit more expensive because we have 7 ticks of intrinsic value. So you're looking at $59. Not bad.
No, it's not
compared
bad.
to
10 cents.
the noon trade that was costing you $49 because you have 2.5 hours extra exposure. And if you ever got a really acceleration one way or the other. So you'd be needing 60 cents or 60 cents away from that $66 mark. And it's 10:26, we'll call it. We get those numbers at 10:30 exactly. And let's see what we have the feed going here. And I just want to see if they talk about what they're expecting here. Yeah, there's a lot coming out there. We'll get the expectation number before 10:30 as we look for that number.
Pretty wild.
Yeah.
Let's go to our man Jim in Palm Harbor. Hey, Jim, what's going on, brother?
Good morning, guys. How are y'all doing?
Hey, Jim.
Great.
Good morning,
Yourself,
man.
What? I couldn't hear you.
No, I say we're doing great. Yourself?
Oh, I'm doing fine.
Good.
I was calling about Amazon again just to see. It looks like it's already broken through one level of resistance, and it's knocking on the door of another level of resistance. And I was just wondering if you think the bottom's in on that, or if it's just a real short-term bounce.
Yeah, stay right there. We'll be coming right back. We'll do the oil numbers quick, Jim, and we'll come right back to you. All right?
Yeah, no problem.
Awesome. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 354, Nasdaq up 190, S&P's up 40. Come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, oil.
We got the numbers. So we have crude oil inventories rising 3.22 million barrels. The expectation somewhere between about 3.2. Bloomberg survey was coming in at about 4.2 increase. Pretty close. Let's jump back to the market, see how we're trading. Jumping over the chart. And as you might expect, pretty muted response so far. We're trading at, again, about 65.90 prior to that news. 10 cents under that 66 price point. Market jumping around a little bit higher action, but sitting there at basically $66. We'll check back in through the hour.
And it was interesting because the API was a lot bigger yesterday.
It was. I think came in at 5.7 maybe or something like that. Definitely a big number. We'll check back in and see what's going on.
And we're talking with our man Jim, and we are talking Amazon. So it looks to me, I mean, this is a real bounce, Jim. So, I mean, if you're going to, and I would say that, yeah, Amazon is going to do a bounce, because when we take a look at it, what you're going to see is that, you get down to 1476, it rejected it. It looks like, let me do this, because I can do this on the monthly, too. Let's see. Okay, so on the monthly...
Quite a monthly bar.
Yeah. On the monthly, it's way too much volume. So that's saying, number one, it's going to be back down to that level, okay? On the weekly, if you're just looking for a bounce, it did reject it. And it looks like, the bar we rejected was the high volume bar from April 27th. Below this, 1415. You get down to 1476. So, I mean, if you're looking for something to go to, I don't know, 1685... It's not bad. Do you know what I mean? And Amazon is Amazon. Do you know what I mean? So.
Yeah, I was looking to get in when it pretty well bottom, but it's hard. I don't even understand why exactly it's bouncing today. Do you?
Well, what happens is that when you go down as fast as we went down in the marketplace, right? It takes a huge amount of energy to go down and go up. I mean, this is the largest down move we've had. Almost in 9 years. So it expends energy, and then what ends up happening is that you always get a bounce.
Yeah.
And if the bounce comes on light volume, to me that's setting up a B to a C and an ABC down. If you're looking to buy Amazon for a long term, don't buy it right now, because you're going to have a shot on it, and it's going to be really hard to buy Amazon. You've probably heard me say this before, because I suspect when we're done with this correction, Amazon's probably going to be down somewhere into 1170, 1265 to 1170 looks to be game, And now the thing that's bizarre about that, well, not bizarre, but if you just go with the percentages, because we had come up so dramatically, if I just take it from, I would say that, February of 2016, it's almost a straight line move up. If I just take it from there, a 50% retracement is 1275. And that's a normal retracement in a bull market move. It's, but because we went up so fast, this retracement theory is pretty intense, man, so I just hang on a little bit longer, because I understand, you want to buy it in the long term. That's what you're looking for, right?
Right, yeah. It's going to be long term once I get in it.
Right, so don't buy it yet.
I had gotten in it at one point and did real well, and then I got into it, unfortunately, a little bit at 1,800 and something, right before, and it went up, and then it crashed on me.
Right.
I had to get out of it with a loss then. So.
Just wait.
Anyway.
Just wait this baby out. That's what we're going to get a lot of information in the next couple of days, and one of the big ones is going to be these bonds. If these bonds do not go down in volume, that is telling me that, hey, guess what? The rates are still going to go down. And that's about as deviant as you can get. And if we have the S&P, if it's going up if the volume's contracting, the probability is really good that we're going to go after that high volume low in the S&P, which we haven't hit yet, because many of the stocks have hit it. And, I've been basically doing this long enough that, when you get sectors hitting it and stocks hitting it, bottom line is that the S&P will get hit. And the other thing is just keep your eye on the financials, because inside the financials, we got under it. And how it comes back on the other side of it's going to be important. So 2676, the financials should not be underneath that if this market's going to be healthy, because the financials make more money than anyone. And they're always going to make more money than everyone. It just happens that they pay so many fines that simultaneously, because it's built into their system now for basically taking people that are cleaners. But the financials, I said would give us all a good indication. If that stays underneath that February low, we're not done going down.
Okay, well, that's good to know. I really appreciate you guys.
Well,
y'all have a great day.
You also have a great one, man. Have a safe one.
Thanks, Jim.
Bye-bye.
Let's check back in on oil and see how we're reacting. 7 minutes after that news.
Pop.
Give it a second. And, yeah, so peaked at about 66.30. Again, we're trading about 65.90. So we're sitting 30 to 40 cents about where we're trading at. At the trades we were lining up, you were looking at $66. You had basically exposure in both directions, so you'd want to see the price finish if you were making that volatility trade as far away from $66 as possible in either direction.
Right.
And we're oscillating a little bit. It's only been about six minutes on those numbers, and we'll see where that jumps back. Even let's go in and break down some of those numbers a little bit more. It's nice. We got the top live. I like the full breakdown they give us. Where are we? There we are. So crude coming in at a surplus of 3.2 million barrels. Estimate was almost to the to the barrel. Cushing crude up 1.8 million. PADD 3 declining 1 million. We'll call it. Gasoline coming in at a draw of 3.1 million. Estimate had been a draw of about 2.2. Again, not too far off, but a little bit of a miss. Distillate's a little off. Decline of 4.4 million barrels. Estimate 1.5.
I wonder if it got cold somewhere. See, that's heating oil.
Okay.
Yeah. And jet fuel. They put both of those together.
Okay.
In the winter, that number is mostly heating oil, you know, but we're really not at the winter yet. Well,
some places are. We're not. Yeah, we live in Florida. We're lucky. I know there's been 33, 40-degree temperatures where you might be turning on that heat at this time of the year. We're November's
did
tomorrow,
the Red Sox have the parade today? Is it yesterday?
It's coming today. Halloween. World Series parade on Halloween. Watch out, Boston.
Boston.
Those duck boats are coming for you.
Oh, that's going to be a good day in Boston.
That is
Halloween's a good day in Boston, period.
Halloween's a good day everywhere. Never mind. Throw a World Series parade with the duck boats onto it. I can only imagine the crowd. Should be some good videos rolling out of Boston today. And then just to sum it up, crude imports, 334 to the downside barrels a day. Production plus 300,000.
Let's go take a look at some of the higher volume equities. I want to look at GM too, but let's see what's out there.
Yeah.
Oh, you got GE. So GE is down 14 cents, $10.03. So the GE, let's go through the GE thing there, because what happened is that last night, what I did is that I dug into this when I got home because of the amount of the write-offs. So picture, this is what's going on the GE deal, and this is where the legacy issue is a monster issue. So what they did is this. They are claiming that on their power unit, that's the $22 billion write-off. Okay? Stay right there, folks. We got a Teddy cake stack, too. Okay, we'll talk to Teddy as soon as we go back in the last segment. I'll do the GE deal.
Sounds good.
Our phone number is 877-927-6648. Teddy's going to be coming right up with us, folks. We have the Dow Industrials right now up 370. S&P's up 189. S&P's up 42. NASDAQ up 189. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 376. We get the Nasdaq up 185. S&Ps are up 42. Let's go over to our man, Mr. Teddy Kegstack from Forex Trading Unlocked, and that's forex-trading-unlocked.com. And in the currency markets, folks, we got action everywhere here. What's going on, brother?
Happy Halloween, guys.
Happy Halloween. Yeah, happy Halloween, man. So, you know, you get the dollar basically got over its high. You get the euro that's pushing its low. You get the pound, man. It's going to be interesting. It looks like it just rejected the lower price. What are we thinking here?
Well, the dollar is definitely in a very big, strong rally mode right now against all the majors, except for the pound, like you just mentioned. That's the only currency right now that's bouncing today. And we have month end. So today is signal day after the close of all the markets. We'll see how this ends up. I mean, right now, obviously, the dollar is strong versus all the majors, and probably will continue to be, I think, for definitely into the next week or so. But the pound's going to be, I think, the precursor to see as the dollar kind of gets maybe a retracement move.
Yeah. So it seems that, I mean, the bounce in the pound, are people like looking and saying, okay, we're going to have something like positive inside this Brexit, or is it just a technical level that it decided to reject?
Actually, you know what? I think it's a sign that they're actually coming to the closure of things, because they had the UK Brexit Secretary, I believe his name is Rob, who Rab or something like that, and I can't pronounce it properly. But he's pretty much said that we only need to wrap up a certain, basically small list of things that they're rapidly moving on. They're not going to be dragging their the conversation, if you will.
Yes.
So I think that's why you have the bounce in the pound, and that's going against the dollar trade today. So, and if that really is holding and they really move on this over the next week or so, then like I said, today's month end. We'll see how tomorrow, if the pound gets back above the $1.28 level, then this probably means that they are wrapping things up, and they'll be pretty much saying, clapping their hands, being like, we're done, let's move on now.
That'd be pretty intense, man. You know, I guess, you know, fundamentally, when you look at a lot of these financial companies, you know, they moved a lot of people out of London, you know, the city of London, and you can see these other countries saying, oh, I hope they're not going to move them back, right? Depending on what the deal is, right?
Sure.
Yeah, wild. So what are we thinking with the euro and the yen?
The euro and the yen, I think right now that the dollar is going to keep pressing this move down. I think that the euro is going to continue to drop, and I think that the U.S. dollar against the yen is going to rally too. Especially right now, we have the stock market with a nice little strong bounce that's going on. Is it a corrective phase or the beginning of a rally? That I'm not going to even take a guess on. But in the short run, while interest rates are slamming their lows, then there's no reason for the euro to bounce or for the Japanese yen either, especially with the Nikkei getting a nice little kickback too, since the Nasdaq's up, and it's pretty much running in tandem with the Nasdaq. So as long as the Nasdaq rides this rally with the S&Ps, I think the Nikkei is going to be lifted. You know, high tides lift all boats.
Yes.
You know, so to speak.
Yeah, no, I can see that. You know what is intriguing is that the yen had quite a turnaround yesterday, man. It was yesterday or the day before. I mean, that thing was heading south and meaning getting stronger, and then bang, it just turned around and decided to get weaker like ASAP. And it's not like our dollar really went that much higher. I mean, it took out the August 15th high. I understand that. But when I look at that, that's not a real conviction move, man. I think it's got to get away from this area, you know? So.
It's floating around the 113 area, and that's been a major pivot for months now, you know? So, and that's, if they can stay above 113, well, then they're probably going to keep pushing this back up to like the 114.5, 115 area. But we have a close today, that's going to be very reflective how the monthly close is. If we set it above 113, that's probably going to mean that we're going to have this rally pushed a little bit for another week or so. I mean, you have gold retracing, interest rates still pushed. Remember, we talked about the carry trade last week.
Yes.
That is really in play right now with interest rates pushing their lows. You have the Swiss and the dollar now above, the dollar's above parity, holding that level above parity. So it's, I think, like I said, with the pound, if that is the precursor signal, we'll see how it closes, and if it rallies and closes above 128. We might see a correction in the dollar, and these currencies get a little breath, you know, to the other side.
Okay.
But if not, I think this rally goes for another week or so, especially if oil continues to break.
Yeah. Well, we just got the oil numbers. Actually, you know, and oil's breaking down pretty good, but oil's up about 60 cents right now. The bottom line, let's see live what we have here. So those API numbers just come out, EIA numbers, and we get some nice volatility in them. Just, well, it's 60 cents, but, you know, I can see oil, Teddy, at that 63 level, too. I mean, it's kind of sticking out like a sore thumb. Even you get a bounce here today, but that 63, the bottom of that, it seems like a lot of these, whether it's the currencies or the commodities, they're going to the bottom of the top of these ranges, which is pretty cool, you know?
Right. Right. It's great for a month end. I mean, this is going to be, we just started the fourth quarter. We're coming to month end with all the markets really hitting trend levels. They're pushing their trends. So this is going to be interesting as the money shifts for quarter end for the funds and things like that. I mean, you know how there's the rollover or just the money alone.
Sure. So in the currency market, this month end is really important. Is that what I'm hearing off you?
Absolutely.
Okay.
Absolutely. I think so, for sure. Absolutely. Especially, like I said, you have these currencies that are pushing the edges of these trends for the month and also multi-month trends. So it's a very big price level, like especially the yen above 113, the pound, and they're not going to, I don't see them getting a rally up to above 128 today, but if they settle positive and then follow through tomorrow with a positive close above that, you're going to see this, like I said, the little short-term turn against the dollar for a little retracement, for a little breather.
Yes.
Or if it doesn't, if these fail and these levels get pressed, keep on riding the trend. The bull or the bear, the dollar bull will remain. It's still there.
No, I can see it. And so the trends in currency markets, too, last quite a long period of time, don't they?
They do. Yeah. They do. And right now, like we said, with the carry trade, if the bonds, especially I was looking at them today, the 10-year and the 30-year, how they settle today is a big deal, too, because the slope is so steep to the downside. If they don't get definitely a nice, like, handle and a half correction in the bonds or something like that to neutralize the current break, this is going to get pounded for another, like, 6 to 8 handles over the next month and a half. We could see the bonds down at the 128 handle by Christmas time.
Yeah, no, I can see the aspect, you know, I was in the updates today. I'm bullish bonds right now, but I think today's a big day because what has happened is they came off the lows, they had price spread, they had volume behind the move, and they've pulled back with light volume. And if that's what happens to me, if they still would stay light volume today, it's like, okay, man, this is deviant, but I agree, it's a big day, and we'll see where it shakes out. Thus far, there's not a conviction in this move, you know, to me anyway.
Sure, and what you said about the volume, too, I agree with you, how this month end closes. maybe this month end is where we do get the short-term retracement set up for the next 2 weeks, where the dollar gets a little bit of a reversal and the interest rates get a little relief, because the stock market's got a good rally. If it still keeps on falling, maybe we're at a pivot point for the end of the month.
Gotta love it. Listen, folks, it's forex-trading-unlock.com. Check it out. Teddy, you have a great one, safe one. Look forward to speaking to you next week.
You too, guys. Thank you.
Thank you. Stay right there, folks. Tommy and I will come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil.
Quick check back in the market. We're coming up on 11 a.m. and quite an acceleration, man. We spiked all the way to 66.59, and from there we're back down 50 cents, sitting right above $66. Two trades we're looking at were noon or 2:30. That spike higher would have got you to a break even at least on the upside, but quite a quick turnaround. Got to have those quick fingers, man.
Amazing.
We'll see how the day shakes out.
So if we go into GE for a second, folks, so this is what you have. I cut to the chase quick. On GE, October 1st, they write off $22 billion in the energy division. That's what the SEC is going over, the Justice Department's going over. Prior to that, 8 months ago, they wrote off $5 billion for Genworth. But that is not the kicker. This is the kicker. They wrote off $5 billion. They have to put an additional $15 billion into Genworth, okay? And well, if we pull up Genworth, what you're going to see now, Genworth, folks, this is long-term health care. And so they have to put an additional $15 billion in over 7 years. And what's happening is that in 2020, the rules are changing inside of this. They have to put the $15 billion in just to pay off their debt structure of, you bought a policy, right?
Yes.
What they're figuring is they're going to have to do an additional take in with Genworth, and this company here is out of GE Financial Services. So what has happened is that now they're up to $22 billion. The analysts don't know whether it's going to be another double. And guess what? When you start adding that up, that's over half. Just that part is over half of GE's market cap. And what the SEC is getting into is how many more of these are inside the GE financial business, because this is what's not accounted for yet. All the sub-loans. Is it sick?
Big numbers.
All the sub-loans, folks. This is not, it's like crazy. Stay right there, folks. You get Fast Market coming up next, and I'm in Basil Chapman, Steve Rhodes, Dave White. I'll be back. Thanks, Phil.
Thanks, Ben.
Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.